Hello, favorite pre-approved buyers, Chad Lubin, Cross Country Mortgage. I hope you're having a fantastic week. I wanted to give you an update of what's going on with interest rates, what's going on with the markets, and some new tools that you could look at to help make a home more affordable to you. Number one, let's go over interest rates. So if you've watched these videos before, this is the buying and selling of mortgage bonds I'm showing you right now. The higher the mortgage bond trading price, the lower the mortgage rate. So you can see on July 6th, around 10:30 a.m., we had our best interest rates really since back to end of May. So we correctly executed a rate lock for those clients in process, and rates have got a little worse. We do not want to see this, which is where we ended Friday, sink down here. This is about another 75 basis points, which is 0.25% in mortgage rate. So we are hoping this holds strong right here. But the markets are very volatile. Interest rates are changing each and every day. It's super duper important to work with a mortgage lender like myself that understands where these trends are and when to lock in. If you just lock in right when you go under contract, you're likely losing on some opportunity to get a better interest rate. So that's the first thing I wanted to share with you. But if you can see, even where we're at on Friday, July 8th, we're still better than we were towards the end of June. So June 14th was the worst interest rate in 8 years. So rates improved about 0.5% from there up to July 6th. So we are seeing some lower mortgage rates right now. Second, we're seeing more supply enter into the market. Now, be clear, that does not mean that prices are going to go backwards. It's simple supply and demand. If you watched my video last week, you'll know that the country's running at about a 200,000 deficit in households formed versus households being created. So it's simple supply and demand. There's a huge shortage. That's not going to change over the next several years. I do think home prices will start to stabilize. You'll see smaller incremental increases in home value, not these big 40% changes we've seen the last 2 years. So you should be able to get a property if you stay the course. So I know a lot of buyers are frustrated. Stay the course. There's some great homes entering the market. We are seeing inventory start to increase just a little bit. And then third, you might want to negotiate a buy down of your interest rate with the seller. So sellers are more likely to negotiate now that there's not as many offers. There's two programs that you could look at. There is what's called a 2-1 buy down. You can see that the current mortgage rates are in the higher 5s, lower 6s. This right now would have a point charge on it, which I typically recommend paying points if the break-even point makes sense for you. So we'll go over that all once you're under contract. You'll know these options. But in this example, there's 5.75 interest rate. That would buy the interest rate down to 3.75 in the first year. So on this situation, a $560,000 home, it buys the payment down to $2,074 for that first full year. So if you look at that $2,074 and subtract that from the normal mortgage payment or the fully indexed mortgage payment, to $2,614 minus $2,074. So you can see that in the first year, you're going to have $540 less mortgage payments per month. So you'll save $540 per month, having the rate bought down by the seller to 3.75. In the second year, it would then increase to 4.75, which would make your payments for that full year $2,336, right? So when we look at that versus the actual payment that will come in year 3, $2,614, you save $278 per month all of year 2. And then the rate goes to the 5.75, which it will stay at for the rest of the loan, and your payment will stay fixed at $2,614. This costs the seller $9,804. There's also a 3-2-1 buy down. So let me change these numbers just to the same so you can kind of get an understanding of what happens here. So what happens with the 3-2-1 buy down is it actually buys the interest rate down all the way to 2.75. And that would make the payments 18.28. So that actually saves $1,786 for the first full year. Wow. So then it would go to 2,074 at 375, just like above, then 2,336, and then 2,614. It would cost the seller $19,230. The third option is just to ask for a true closing cost credit to pay points to buy down the interest rate. And as you get close to making an offer on a property, we're happy to run those numbers with you if your agent believes a closing cost credit is possible from the seller. So just some alternatives to think about to save you on your money. Here's what I thought. These are my beliefs. These aren't Cross Country's belief. My beliefs are this: mortgage rates are going to be lower over the next 2 years. I believe that the current administration will make sure that rates are lower come the election year of 2024. And the thought process of these loan programs are, hey, let's buy down the payments. Let's make it more affordable for you while rates are higher, and give ourselves an opportunity in the next 2 to 3 years, a chance to refinance. So that's the thought process here behind these options. Anything that we can do for you, please give us a call, 312-731-4939. Once again, 312-731-4939, or you can email us, chad@thelubbengroup.com. That's THELUBBEN group.com, chad@thelubbengroup.com. Have a great time searching for homes. Know that those that stay the course always get a home. We're honored to be on this journey with you.